Barrick Mining shares higher today after the company announced the potential spin-off via an IPO of its North American assets. Also, its stake in that huge mine in the Dominican Republic. Investors seem to like that news. Let's get more from Colin Cieszynski of SIA Wealth Management. Colin, great to have you on the show. Thanks for joining us.
Oh, thanks. Good morning, Andy.
What was things moving very fast at Barrick? Mark Bristow, the CEO, is out, and they're now talking about breaking up the company potentially.
It sure is. I mean, at this point, they're talking about spinning off a minority interest to the public in the North American mines, and that's fairly significant because a lot of Barrick's problems and things that had kind of weighed on the stock prior to the last few months when all the changes started were international, and they've always had this core jewel of the Nevada mines that are very, very, very stable and have been producing for decades, but the company's valuation has depended a lot on the ups and downs of political and operational risks in other countries.
Yeah, it's Pakistan comes up here, and National Bank says that one concern here could be the actual valuation on the rump of the company, Africa, and then this giant Pakistan mine that's going to be swallowing up cash as they build it out.
It's true, and so that's why I think what it seems like they're trying to do is to kind of unlock some of the value in the North American operations, and then here's what they're going to do with it. Right after that, are they going to use that to potentially shore up some of their international operations? It kind of remains to be seen at this point in time what they would do with the capital they raised from this spinoff.
The banks are beginning to report this week. What are you looking out for here, Colin?
The banks have been really strong lately. They've been showing really great relative strength relative to other stocks in the Canadian market. So what I'm looking for from the banks this time is we've had a pretty good period in the stock market. So you would think that the capital markets and the wealth management divisions have the potential to do well. And at the same time, on the banking side, we'd like to know, well, how is the Canadian economy? How is the U.S. economy? The Canadian GDP report that came out last Friday was spectacular. So hopefully that would turn into positive results for the banks. We'll see what's coming from them. So things we'd want to watch for is the headline results, comments on the economy. What do they do with their loan loss provisions? That's always a big one with banks. Are they lower than previous, or are they higher than previous, or what are they doing with those? That's always a big tell on what the banks are thinking going forward. And do any of them raise dividends? This is their fiscal year end as well.
Right, and the banks, of course, famous for their big dividends. And one thing that's interesting to me, the bank stocks are down today. They did hit a record high, as you know, on Friday. But then these non-bank lenders, such as EQB and Propel and GoEasy, have seen major pressure on their shares.
Yes, and that's probably related to questions about how strong is the Canadian economy, because the non-bank lenders might feel it more at the margins than they might get impacted first relative to the big banks, which are, well, they're just so big and they're in diversified and into so many different businesses. Do
you always have to own some Canadian banks if you're a Canadian fund manager? Pretty well, Colin.
Yeah, I mean, if you want to be able to try and keep up with the index when the banks are doing well, if you don't own banks, it's really hard to keep up because they're such a significant part of the index. So to a certain extent, yes, I mean, that as an investor, and particularly institutional investors, it is important to at least have some banks at any given point in time, just for benchmarking purposes. There's certainly room to go off from that. There's certainly room to run concentrated portfolios, but even then, it's a matter with the banks of when they're doing well, then there's a point where they need to be owned. And I'll say in our relative strength rankings right now, we have seen the banks climbing up to the top. They are dominating to a point that we really haven't seen in quite some time. They're usually kind of an upper middle kind of group, but now they're actually right up at the top, which is quite interesting heading into this earnings season.
Is there a case to be made that, the past doesn't necessarily point to the future with any accuracy, but over the years, if you just had all your money in Canadian banks, you would have done just fine.
Yeah, I mean, to a certain extent, yes. I mean, the banks have their ups and downs like any other sector, but in Canada in particular, we have the issue of the resource stocks are extremely volatile, and they're a big chunk of the index. So there are times when the resource stocks can drive up the index, can drive down the index, and the banks are kind of this stable group within the middle of all of that. That yes, they have their ups and downs, but not to the extent that some of the other sectors do.
I'm just looking here at a calculation of if you had just put all your money in bank stocks at the end of the last century, Colin. Wow, I can't believe this. According to my Bloomberg screen, you would have had a return of 2,000%, whereas just putting your money in the TSX Composite would have been a bit more than 600%. So 2,000% versus 630%. Incredible how the banks have done well. And as you know, they tend to earn higher profit margins, or at least return on equity, on their Canadian business.
That is true. I mean, they're in such a dominant position in Canada that they do. They're in everything. I me're in, right. They're lending to all the companies, all individuals, homeowners. They have credit cards. They have insurance. I mean, they literally, as I say, they kind of in a lot of ways almost they are a reflection of the Canadian economy because they have a finger in every pie.
The government made noises in the budget about stepping up competition in the sector. I think we probably shouldn't hold our breath. They have such great lobbying power, for one thing.
It's hard to say. I mean, who knows what they're actually going to do over time? And even if they did, it would take a certain amount of time. Even if they did opened up Canada today, it would take a certain amount of time for anybody to come in and make a meaningful inroads, just because they have such a dominant position in the market right now.
Yeah, although apparently the banks, I'm sure they're paying attention to the rise of these financial apps. I noticed that a Royal Bank ad not so long ago poked at a finance app, mocking it. I'm sure they're worried that these apps may ultimately take younger customers away.
It's hard to say. I mean, anything is possible. The question is how much. I mean, it's at the end of the day, it seems like just about anything you want to do, you're going to have to do through one of the big banks. You might be able to do certain things with other providers, but at the end of the day, you're pretty much tied to the banks in this country.
Colin, thank you.
They're in a very, very strong position.
Colin, thank you very much. Colin Cieszynski of SIA